I wasn't gonna make a video today, but Tesla dropped 15%. And all the people on YouTube started saying things like this.
So deliveries missed by 3% and the stock is down about 10%.
So Tesla missed expectations, but did it really? Did it? Check this out. This is from a year ago, and this is the consensus from a year ago. 1.31 million deliveries. And the actual deliveries you can see are actually about 3,000 higher than the expectations from a year ago for 2022.
It's not all demand destruction. Partially, a lot of it is just pure logistics. When you manufacture cars in China, in Germany, in the US, and you have to deliver them to Bulgaria, Romania, and the Czech Republic, it's complicated. So a lot of cars are basically in a logistical nightmare. It happens.
And those make a lot of sense if your time research for a video is 15 minutes. But if you can spend more than 15 minutes per video doing research, that doesn't make any sense. These people are either lying or just don't know any better. And some of those guys actually make really good content, so I'm kind of surprised about these takes. Now, in the Q3 earnings call, Zach Kirkhorn, which is Tesla's CFO, said they were gonna do just under 50% growth for 2022. And the reason this is important is because unlike Elon, Zach still has a lot of credibility among big hedge funds and institutional investors. So many of us doing research, we estimated that Tesla was gonna do 450K to 480K. Gary Black came to that conclusion, I came to that conclusion, and judging by today's reaction, a lot of people also came to that conclusion. And that's why you see the stock dropping 15%. Now, for Kevin to say it's only a 3% miss and it doesn't make any sense that the stock is acting this way, it's completely off the mark. Not only is it not just 3%, but the increase in inventories is a big deal too. But now Kevin has a public ETF which has 30% exposure on Tesla, and I think he's trying to push some certain narrative or something. And don't get me wrong, I still think Tesla is extremely undervalued at these levels, but this is not a 3% miss, bro. Like, stop with the nonsense. Even worse, Matt is pushing the boundaries of reality here. He's arguing that because the consensus was lower at some point in 2021, we should use that consensus instead. It's not how it works. Look, one of the reasons why the stock went up is because at some point that same consensus went up to more than 1.4 million cars. And then he goes on to explain that there are some years that Tesla didn't do even 40% growth. But the stock's not gonna do well those years. The amount of cope and self-dilution in here is just mind-blowing, bro. This morning, it's like Tesla Q, but on the opposite direction. Like, they're both disconnected from reality. And then last but not least is Tom Nash arguing a big part of this was due to logistical reasons. Well, tell me then, Tom, why didn't they export the first 2 months of production to Europe? Super smooth, you have enough chips, you can sell the last month of production in China and the first 2 months in Europe. Why didn't they do that? Well, the truth is, even with how good the market in Europe is for EVs and how much they're selling, Europe cannot absorb 2 months of production from China, not even 1.5 months of production, especially with Berlin ramping the way it is. Also, if it's just so logistically driven, why 2 discounts in China and 2 discounts in US? Anyway, rants over. These guys are cool, but I just can't deal with all this self-dilution going around. And the question is, how do we fix this then? Well, the first thing is you gotta make sure that the Model Y gets a tax credit. Tesla's getting screwed by the IRS and the tax code here on the Model Y, especially on the 5-seater. But all I hear about is complaining in Twitter and signing some petitions that are not gonna do jack shit. None of that's gonna help. Just lower the price to $55,000 and undercut everybody. You 3x the Model Y market overnight and maintain a very healthy 10 to 15% margin. And that should be plenty for keeping profitability going. And maybe even exceed it because you're gonna actually make more money on volume. And you're gonna get efficiencies from the Texas ramp and raw materials coming down, all of that stuff. Secondly, fix the China market. You take back all the price increases that happened in China in 2022 and then cut even further than that. But you're gonna have this situation where you cut prices every single month because all you're doing is pissing off your clientele in China. They don't like this stuff where they buy and then you cut the week after. They feel screwed over. A good reason. Just do one decisive aggressive cut and that's it. And then last but not least, you gotta build the Cybertruck fast. Like, I don't understand how the Ford Lightning came to deliveries in like 2 years and then the Cybertruck's taken like 4. A lot of people don't even realize that the Cybertruck was announced in 2019. That's almost 4 years now. If Ford can do it in 2 years, why can't Tesla do it in 4? And I don't even like ranting like this. I think Tesla is gonna be the biggest company in the world. We're all gonna get super rich or even richer. And I want Tesla to succeed, obviously. It's my biggest position. I'm not selling any in here. None. But I don't think being naive, dumb money, and then just agreeing with everything like Tesla can do no wrong, no criticism, nothing, that's not gonna help anybody. That's not gonna help Tesla. It's not gonna help us. And it's just like the wrong mindset. Anyway, for the true implications of this delivery numbers on Q4 earnings, I hope this video helps over here. And thank you very much for watching, and I'll see you next time.